So one of the most important things to consider about cryptocurrency is that it's not about Bitcoin anymore. And to that end, the cryptocurrency market is extremely diverse. That's not to say that Bitcoin is dead or anything akin to that, but rather it's accurate to say that cryptocurrency as a whole has become a microcosm of larger economies. It's not even accurate to use the term cryptocurrency to refer to the entire space, as many new tokens are more focused on utility than peer-to-peer transferability. All digital coins share a common heritage with Bitcoin's genesis. And generally speaking, all coins aim to disrupt some centralized, established industry. How they do that is largely dependent upon what so-called sector they're operating in. So, in the name of becoming educated about what kinds of cryptocurrencies are out there, and more specifically about what sectors and subsectors they operate in, let's explore the many captivating and compelling use cases of this blossoming technology. Ideally, once you finish this series of videos, you'll have a greater understanding of the many possibilities we're just scratching the surface of. Welcome to Ready Set Crypto. This is your brain on blockchain. So before we dive headfirst into this, understand that even with all the time and thought that it took to prepare these videos, I will in no way be able to give you a comprehensive treatise on every possible use case for blockchain and distributed ledger technology as a whole. Not only that, but I recognize that even when I try to place projects in certain buckets, you might disagree with that determination or believe they deserve their own special category. What I need to impress is that I can't cover everything, even with multiple videos on this topic. There's simply too much. There's too many applications and use cases. Instead, what I think is more beneficial is that by the end of this, you should start to see patterns and associations and have a deterministic view when evaluating projects by their associated sector. While I will not overtly rank sectors, you can take what you learn and start doing that on your own. And I think that is a more holistic, smart money approach to evaluating cryptocurrencies. For example, instead of investing in a coin because someone said to, evaluate the sector it belongs to and see how it stacks up against its competition. Then, if you find merit in similar projects, invest in this sector as a whole, not in the individual crypto itself. Too often I see this erroneous approach where people get tribalistic, adopt an us versus them mentality, and do everything they can to build up their favorite project while knocking down the competition. It's nonsense and indicative of an immature investor. The smart move is to hedge your bets, not go all in the first round like an amateur poker player. The truth is, we are years away from seeing how this will all play out, so having a closed mind approach to investing in certain projects is malarkey and will not benefit you in the long run over a more diversified portfolio. So, I digress. You guys know that I like to use my soapbox to speak to things that I'm confident will benefit you in the long term. To that end, let's get into the different sectors and subsectors of crypto and hopefully learn a few things. So the first sector to talk about is digital cash, which is synonymous with cryptocurrency in its purest sense. So digital cash, simply put, is money that can be transferred electronically from one party to another during a transaction. Bitcoin, Litecoin, Vertcoin, Nano, and Dogecoin are all great examples of digital cash. And when it comes to digital cash, you're probably pretty familiar with these. They're what most people think of when they think of cryptocurrency as a space. What makes them compelling is that they're more secure and efficient than government-issued fiat currencies. Fiat being Latin for let it be done, predicating the notion that currencies of the world are not backed by an underlying physical asset and instead are bolstered only by the faith that the issuing government has the ability to collect taxes. Soon we'll see digital cash that can process transactions faster than your typical electronic fund transfers and do it for cheaper than solutions utilizing, for example, the SWIFT network. The thing to know with digital cash is that it's highly dependent on user adoption, and why we'll likely see only a few coins make it to the top of the heap. I do think that coins that will win this sector will be the best at being ubiquitous while being effortless, and why I support the notion that cryptos will only succeed if people don't realize they're using them. Another reason I see digital cash gaining support is just look what happens when you buy something at a grocery store. Let's say you spend $100. If you use a debit or credit card, there's a fee associated with that transaction, even if you don't see it. It's no surprise that everyone who touches the transaction wants to get paid, including the issuing bank, the credit card associations such as Visa and MasterCard, the merchant bank, and the payment processor. At a basic level, every time you process a transaction, you pay several fees. Of that $100, likely 2 to 4% is going to the various middlemen involved. Again, you don't see that fee, but it's not as if the grocery store is just going to eat that. They're going to have to raise prices to make up for that loss. And this is just one example. Once you realize that everything you pay for with a card is going to cost more because of that fact, it certainly loses its luster. I think if more people knew or cared about this, they demand change because cryptocurrency has shown us that we shouldn't accept egregious fees on every transaction as an absolute truth. So that's digital cash in a nutshell. There's way more to it than I can get into here, such as consensus algorithms, double spend, and Byzantine fault tolerance. But understand that the blockchain technology that makes cryptocurrency a reality isn't some completely new foreign concept. It's the amalgamation of three principal technologies that existed well before Satoshi's white paper in 2008. Those being the internet, private key cryptography, and a protocol governing incentivization. Now, there's two subsectors of digital cash. The first are stablecoins. These are coins that are backed by an asset and meant to be pegged against a stable currency, such as the US dollar. The most well-known is Tether, or USDT, but I look forward to coins like DAI becoming more accessible due to concerns over Tether's practices and potential insolvency. The second subsector is privacy coins. These are coins that mask the identities of the parties involved, allowing for such transactions to take place outside the purview of the law. Now, not all privacy coins are created equally, and some have had issues with breaches and anonymity. But for all intents and purposes, privacy coins can currently provide the services that they advertise. Good examples of privacy coins include Monero, Zcash, Zencash, Not Verge, Navcoin, Pivx, and 4. One additional perceived benefit of privacy coins that is not often discussed is that it protects against taxable events. Normally, there is sales, income, or other taxes involved in every transaction involving large entities. But when the transaction is anonymous and no public record is kept, this allows businesses and individuals to operate outside the view of tax-hungry governments. And as I mentioned earlier, fiat currency like the US dollar is really backed and valued by the ability of the government to collect taxes. Without this ability, the government loses power. Without power, governments cannot provide the public with adequate services, nor maintain the status quo of society. As such, the governments of the world must maintain that coercion, the threat of hardship and loss of society should taxes fail to be collected. It's definitely an interesting point of contention moving forward for crypto, and especially for privacy-focused coins, as they could very well be in the crosshairs of governments desperate to maintain their power. As an example, Japan is forcing exchanges into delisting or limiting privacy-focused coins. It's a little concerning to see, and it's sure to become a trend with more countries, which is why I anticipate more exchanges to move to blockchain-friendly nations like Malta in the near future. So moving on, the next major sector to discuss is platforms, specifically those that deal with smart contracts and decentralized apps, or dApps. Now, cryptocurrency today is the era of the smart contract. While Bitcoin may have shown us that a payment system can exist in a decentralized peer-to-peer environment, which was certainly groundbreaking, it was the advent of Ethereum that really moved the whole space forward and closer to mainstream acceptance and adoption. Ethereum ushered in the era of the second-generation blockchain as people saw the true potential of dApps and smart contracts. For those unaware, smart contracts were a huge leap forward over what Bitcoin introduced us to, because smart contracts help you exchange not only money, but property, shares, or really anything of value. Importantly, it does so in a transparent, conflict-free way while avoiding the services and fees of a middleman. Think of smart contracts like an ATM or a vending machine. If you wanted to arrange a contract with someone for business or ownership or whatever, You need a lawyer or notary to organize everything and officiate it, and you'd have to pay them. But with smart contracts, you go up to that ATM or vending machine, deposit your cryptocurrency, and in return, your contract is automatically given to you. What's cool is that the smart contract automatically has the rules, penalties, and other legalese all defined in the code, and the terms are automatically enforced because code is law. I think for a lot of people, it's hard to think of the implications of that right now. But as an example, you book a flight and you expect to depart at a certain time because otherwise you might miss your connecting flight at the next airport. Well, if your flight is delayed, since your airline ticket is actually a smart contract, you are automatically reimbursed for the delay or missed flight without having to talk to anyone. That's the future I want to live in. The other big piece of these platforms, like Aetherium, is that they facilitate the building of decentralized apps, or dApps. This is where the term ICO comes from, or initial coin offering, as a lot of ICOs are built on top of platforms like Aetherium. The greater implication of this is that now people don't have to reinvent the wheel when it comes to the complicated technology of blockchain. They can utilize the benefits of a distributed ledger without having to explicitly code it. This allows them to focus on what they can do with the tech instead, leading to the explosion of crypto projects we've seen over the last year. Other good examples of these platforms are Neo, Cardano, and EOS. The thing with these platforms is that user adoption is key. Over the long term, only the projects that can attract a critical number of users will survive. People won't want to launch an ICO on a platform that has no users. They'll want to launch the platform where they can get the most exposure. With a few exceptions, the vast majority of blockchain platforms don't offer clear, significant benefits against the established ones, which in turn will likely result in a large number of zombie platforms, and I'm hesitant to invest in anything outside the top 50 in this sector for that reason. Now, there's one subsector for this platform sector, and it's one that I'm pretty excited about. That subsector is Interoperability Platforms, which aim to connect the platforms so that value and information move seamlessly between them. I think that's huge, and will become even more of a big deal in the coming years. Icon, Arc, Aeon, and Blocknet are all good examples of this, with a nod to Chainlink for building oracles that will help make smart contracts more fluid and data operated by building an oracle network. The next major sector in crypto is finance, which deals with the operations of money outside simple peer-to-peer transfer like we saw with digital cash. Overall, this is the biggest sector in crypto. But if you look at it closer, it's really just comprised of 6 large subsectors that each deserve special mention. The first is payments, and this is for anything that deals with processing merchant services, remittance, payment cards, connecting banks, connecting payment providers, and really just anything that is looking to be more efficient than the legacy banking and payment processing industries. For example, Amizigo is looking to, quote, bank the unbanked. Any user of Amizigo will be able to conduct financial transactions such as payments, remittances, payroll deposit, B2B commerce, supply chain finance, loyalty programs, asset management, and trading in a decentralized, inexpensive way. The thing is that 2 billion people worldwide do not have a bank account or access to a financial institution via mobile phone or any other device. Giving people access to a low-cost way to process all these services I just described is why I believe crypto is here to stay, and why projects like Amizigo are leading that charge. Other good examples in the payment subsector are Ripple, Stellar Lumens, and Request Network. The next finance subsector are exchanges. The 2 big types of coins that dominate this subsector are exchange dividend coins like Binance Coin, KuCoin Shares, BBox Token, and COS, and you'll have decentralized exchange coins like Kyber Network, 0x, and Loopring. Another kind of interesting coin in the exchange subsector is an exchange interoperability coin like Cash. Cash is a utility token with the purpose of facilitating the upcoming Liquid platform. The intention is to take silos of liquidity, which are on individual exchanges, and connect them. This will ultimately increase the overall liquidity of the cryptocurrency market, improving the market and encouraging organic growth. Exchanges will continue to be an important cornerstone of the crypto sphere, and I look forward to seeing how they evolve. After exchanges, the next subsector in finance is investing. These are coins that will help facilitate some aspect of investing through the use of a blockchain. For example, Polymath enables trillions of dollars of securities to migrate to the blockchain. Or as another example, you could invest in a mutual or index fund using Economy or Crypto20, allowing you to diversify your risk. After investing, we have the lending subsector. This sector facilitates lending between parties without having to use a middleman or high-interest lender, typically a bank. For example, Aetherium and Ripio Credit Network facilitate peer-to-peer lending, allowing people to lend money in a trustless fashion and for significantly less fees. While I think this subsector does have a lot of promise, I think this is one of the toughest subsectors in crypto to facilitate, as people are used to trusting banks for loans despite their high fees. Next, we have the funding subsector, which facilitates peer-to-peer crowdfunding without large overhead fees. For example, Kick ICO is an ecosystem that allows every participant to benefit. It's a community-based platform which is used to host fundraising campaigns, support, rate, and discuss them, and purchase their tokens via cryptocurrencies. Think of this subsector as a decentralized Kickstarter or GoFundMe. The last subsector of finance is insurance, which deals with decentralized insurance payments and claims facilitated through smart contracts. For example, Byteball is building peer-to-peer insurance, which allows you to hedge against negative events without having to deal with an insurance company and their questionable morals. It allows you to buy insurance from peers in case a negative event occurs, or you can sell insurance for profit. In this way, insurance is just a simple smart contract. For instance, this would be a perfect example of how you get reimbursed with the flight delay example from earlier. There would be a flight delay oracle that would be notified of the flight delay and communicate that information to your Byteball insurance smart contract, allowing you to be reimbursed should your flight be delayed. Okay, so those were the major sectors of crypto: digital cash, smart contract and dApp platforms, and finance. You should definitely be familiar with these, as they comprise easily half of the top 500 coins in some capacity. There's certainly some of the best use cases for blockchain, and I fully anticipate we'll continue to see them become even bigger. When it comes down to it, digital cash, smart contracts, and crypto finance are all big improvements over existing systems, especially because they all eliminate the need for middlemen taking fees. So, as I mentioned, this will be a multi-part series because we've got many more sectors to cover. Thankfully, I'll spend less time covering the subsequent sectors because the ones we discussed in this video are by far the biggest and deserve the majority of the attention. So, thanks for watching, and I'll see you in the next one. And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already, in order to continue to see high quality cryptocurrency analysis and advice. Don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also, be sure to watch some of our other videos and visit our website, where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter. So definitely check us out. Thanks again for watching. This has been Ready Set Crypto, and I'll catch you in the next one. Cheers.